Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about a very interesting stock trading at only 2 rupees. That's Urja Global, and why this share is an avoid at the moment. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. So now let's discuss about Urja Global. Before I begin with this presentation, I want to make one point clear that I was going through many videos and analysis of people who are stock investors or who have been investing in stock market for a few years, and they are experienced and they are putting up their videos and their views on Urja Global. And as far as I'm concerned, I have analyzed this stock over the last couple of days and have come up with the analysis that is being presented now. And after a lot of deliberation, I have come to this decision that this stock is an avoid, and I'll discuss the reasons why it is an avoid and why people who are talking of investing in in such company are making it the cardinal sin of going into a value trap in which you don't know at what price to get out or at what point to get out of the share. So let's begin with the snapshot of the company. The company is into solar power appliances, so they produce solar power panels, they produce PV modules, and other kinds of equipments which are run through solar, say LED bulbs, or geysers, or inverters, or even e-rickshaws. They have immense potential as it is a sunrise sector. So this company has immense potential. In fact, this sector has an immense potential to grow over the next few years. It has a market cap of only 100 crores, and there's always been a government push towards helping this sort of a sector which is related to renewable energy, whether it is solar or wind or hydel. Now let's look at the numbers per se of the company, and this is where the trap comes in, and I'll discuss that in the next slide. But first of all, just to address the fact that what are the numbers. So the stock has fallen from rupees 10 to 2 rupees. It made a high of 9 and a half rupees about couple of years back, year and a half back, and it has an EPS of around 0.04 to 0.05. So it is even with the say at a price of 2 rupees 15 paisa or 2 rupees 10 paisa, it is trading at 50 times or 53 times. It has a very low return ratio, and I'll just give you a snapshot of what I'm talking about. If we go to the section here of the results, for instance, it has done a sales of as you can see, around 47 crores. It has done a sale of 47 crores in June 2019, and if we come down, the eventual net profit of the company was 41 lakh. So if we just do a maths over it and calculate this further, then we'll come to know that, let's see, so 41 lakh over 47 crores, so this will be, so actually the return ratio or the net profit margin, as it is called, the net profit margin of the company comes out to be 0.8%. So that's 41 lakh divided by 47 crores. The net profit margin comes out to be 0.87%, not even 1%. And this is where lies the main problem, that the return ratios are extremely low for a company of this stature, for a company which is 100 crores, which has a market cap of 100 crores. When you're doing business and when you're making profits, say 1 crore, 2 crores, or 30-40 crores, then the return ratios should be really good, because your base is very low, so your returns should be good, and you don't have a very fractured balance sheet or a stressed balance sheet. So on a sale of 175 crore for the year, it is doing a profit of 1.8 crores, which is around 1% ROE or 1% net profit margin. And they have 5 major projects going on at the moment. and these projects are in both north and south of India. And why I'm stressing the fact on this is that these projects take a lot of time to complete and the money to come in. Coming to the value trap part of it, it is this is what the protagonist or people who are favoring the stock would tell you, that you should invest in this company because it is at a very attractive price of only 2 rupees. When it was trading at 1.5 rupees, 1.2 rupees, even then people were talking about it. It is a penny stock yet making profit, so it is making profit. It is in a sector which is always seems to be, it is about to take off, and it has always been like this. You remember Suzlon Energy, what happened to it, and over the last 14 years what it has done to the investors. In the wind power sector it was, and everybody was saying in the early 2000s that this is the sector to look at for the next 10 15 years. And 14 years 15 years down the line, where we are at, Suzlon is at around 3 rupees, from being a darling of the market in the early 2000. So people say that it is a penny stock, and because it is in a sector like the solar energy, so the sector will grow very fast over the next 8 to 10 years, and this stock may go to 200 300, and always it could be 100 bagger. There is a government push as well to it, that government always talk of clean renewable energy, and they are working on it, but they don't provide the incentive that is required for these kind of companies. They do provide the incentives for the consumers, and that's where lies the second part of my discussion, that where the company would have a lot of problem, which I'll talk in the next slide. It seems like a sure shot multi-bagger, but it is not. And maybe it will go to 8 10 rupees and all. It will become 3x 4x, but you don't know. At 8 rupees, you'll think that okay, this is headed northwards towards 15 16. I'll not sell. And from 8 rupees on circuits, it will come down to 3 or 4 rupees, and you'll have nothing in your hand. So problems are long lasting, and which I want to discuss now. The first big issue with the company and the stock is having a very meager return on equity and return on capital employed. They have a very meager net profit margin of only about 0.08%, as I just described earlier in this presentation. The company is into a business which has a very long or high gestation period that goes on for 10 12 15 years. These projects take around 8 to 10 years to set up. When you are setting up solar panels in cities, etc., then this has been a sunrise sector always, but has it taken off? No. Over the last 15 years it has not, and I don't agree with the fact that over the next 6 7 years something is going to happen and these companies will be mainstream into the business, and this will become consumer companies in the coming years. uh, Not even the one of the top 10 solar firms. So I have researched about which are the companies which provide solar panels to the consumers, to the retailers, to the public in India, across India, and not to the third party or to corporate houses. I am talking of having solar panels in homes, because in many parts of North India, people are having solar panels at home. So, which are the companies that are doing well? The number one company in that sector which is doing well has a market share of over 50 60%. It is not listed, so I'm not going to talk about names here, but to just tell you that number one firm which I'm talking about is providing solar panels for only 25,000 rupees, and that is helping people to drive their normal day-to-day life at home. For instance, it can run fans, electricity, say fridge, or your tube lights, etc., LED bulbs. And if you can put up 3 4 such panels, so 1 lakh rupees investment, you can run a couple of ACs as well throughout the day with those panels. So this has been provided by one of the firms. It is not listed, it is the largest firm that is providing it. And when you have such competition, the business is going to come to these companies. Then there is one company which also provides inverters, normal inverters, which are electrical inverters. They are into the same segment of providing solar panels, and they are pretty big. Then there is a one conglomerate, that is Tata is into providing solar panels. So where would Urja Global stand if, for instance, all this thing come into place, if things really start working out and people start putting in place solar panels? They'll go to a very big brand such as Tata, or the couple of companies that I talked about, which are market leaders, rather than going to Urja Global. So again, business might not come to them. And what happens then is, if you have around say 15 companies in such sector, then it is very difficult to survive. Only the top 3 4 survive, the rest either merge or get extinct, as we have seen in the telecom space in 2007-8, when there was a rush for telecom licensing, and there was a rush of selling of mobile phones. Then there was a lot of sim cards that were being sold. So it became a very lucrative business and everybody wanted to get into it. But what we have today is only about 2 or 3 companies left out of say 14 or 15. So if even if we say that the sector would do well, which I have a complete doubt over, even then this company might not do well, and others which are market leaders would do appreciably well in the coming years. And there's no denying that companies like Reliance or any other companies of that sort might get into the business. So Reliance might come into the solar business or the wind business in the next 5 6 years, and it could even eat up businesses of all the companies that I'm talking about. So it is a very low margin business. Why I'm saying that is because government is providing a lot of incentive for the company, but it is providing even more incentives for the consumers, and government will keep a watch that these products will never sell for very high prices. If you compare it with Aisha Motors, say Aisha Motors say selling their bikes or Royal Enfield bikes for 1.5 lakhs, 2 lakh rupees, 2.5 lakh rupees, there is no cushion over it. Whereas for such products such as solar panels, etc., which helps in society and which helps in bringing the electricity cost down, government will always chip in with providing a ceiling to the pricing. And this is also extremely important when we gauge the probability of knowing what the profitability of the company would be. And here is a simple example of it, being Coal India, in which there's total government intervention. And I have no doubt in my mind that we could see over the next 6 7 years government taking over the solar panel companies if solar really does well in this period. So what is the final verdict? For me, the final verdict is that it could become 4 5x. So this two rupees 20 paise could become 10 rupees over the next 1 year, 2 years. Yes, but will you sell at 10 rupees then? You might not be able to sell then, and the stock may fall, and it could fall on circuits and could come back to 5 6 rupees, and then you'll think, oh, better we would have sold at 10 rupees, or I should have sold at 10 rupees, and then it would fall even more to back to 2 rupees. Because the vision, or you cannot see how this company would make multifold returns for it to become multi-bagger. So it cannot say grow like 10 crores in 1 year, making profit of 10 crores, then next year 20 crores, then next year 40 crores. That's how multi-baggers are made. When it really doubles up profits year on year, then people would know about it and buy it, because no big investor or no renowned investor or firm, or say even NBFCs, would get into such companies which have which has a government intervention first of all, and which is into a sector which has always bleeded after a bull run. Say with say a clear example would be Suzlon, as I mentioned. So don't look at a price, always look at valuations. valuation speaks a lot. So valuation at this moment is not in favor of Urja Global at 53 times earnings for a company which is doing what 10-12% growth year on year. It is in itself is not feasible to invest in at the moment. Maybe at 80 paisa or 70 paisa it might be very attractive. So always look at valuations. Right now Aisha Motors might look I dare say that Aisha Motors looks more favorable in terms of valuations than Urja Global. And for a small cap to become a multi-bagger, it has to be market leader. And I cannot emphasize this point more because I've lost a lot of money investing in third tier, fourth tier stocks, whereas the top leader or the leader of the pack has always done well. Even if it was expensive, it kept on becoming more expensive as the months or quarters went by. So always buy small cap companies which are leaders in their business, even if it is a niche business. So look for high growth stocks. Don't look for stocks which are doing 15-20%. Look for stocks even in the small cap index or micro cap for that matter, as this is only 100 crore company. So 100 crore market cap company, look for those companies which are in this bracket, which are doing 30%, 40%, 100% growth. And there are companies around if you just get into every company that is listed in the market. So this was my video on Urja Global. I hope you like my video, and please like and subscribe my channel, hit the bell icon so that you can get my video straight away when I post it. Thanks a lot for watching.